Hi, sir. Am I audible?
Yes, yes, very much.
Yeah, good
Am
out.
I audible?
Yes, you are audible, sir. Good morning, everyone.
Good.
We can wait for 5 more minutes so that people could join.
Yes, yes, yes. Let us wait for 5 minutes, then start
Hi,
that
sir.
time.
Am I audible? Okay.
And kindly enable that say, screen sharing so that I will share my PPT. Hello.
Yes, sir. The sharing option enabled. Hi, sir. Shall we start now? Am I audible, sir?
Sorry, I had muted myself.
Okay, sir.
Okay.
Please, everyone, confirm in the chat box that we are audible or not. Okay, thank you. Okay, thank you for the
Okay.
response. So we are
So,
starting today's session. This is our 6th session of National Tax Lecture Series. Welcome, Advocate Vinay Sharaf, sir. Welcome all the participants. Over to you, sir. We can start.
yeah, thank you. So today we are going to discuss about the fundamental concepts relating to exemptions, zero rating, exports, and refund. All of them are interconnected. So let us try to first of all understand the fundamental concepts relating to the exemption. You see, many a time we have a doubt or confusion whereby the words exemption, non-taxability, or nil rated or zero rated are used interchangeably, and they are understood to be one and same, because the effect of all this is that the tax is not payable. So while apparently the effect of an exemption or a nil rated or a non-taxable or zero rated are one and the same, but the consequences are different. Apparently they appear to be same, but if you review the overall situation, then you will find that even though the tax is not liable to be paid, but the consequences are not the same. Because the exemption means while the item of a supply of goods or service is taxable as per tariff, so fundamentally it is taxable. But considering any reason of issuance of the notification in the public interest or general public good, which may be, say, the product itself is such, which is used by, which is a item of necessity, so it is exempted. Or it has the purpose of promotion of a particular kind of an industry, or it may have the purpose of development of a state or union territory, or it may be that it is a product or item of social or cultural importance. So for any of the reason which the government deems fit, the product might be exempted. But exemption does not mean that it is not taxable. It is a taxable item, but by virtue of a notification, it is exempted. Then if an item is nil rated, that means it is in the tariff itself, the rate of tax is nil. So if the rate of tax is nil, then it is not taxable in the first place. It is not non-taxable. But there may be a case, it is not, it is while taxable under the GST Act, but the government in its wisdom deemed it fit to keep the rate of tax to be nil. While if in the tariff itself, if the rate of tax is kept as nil, then generally it is construed to be a intent to have it for a longer period. But if a notification is issued, then depending on the situation or the socio-economic or the purpose for which is introduced, if the purpose is served, then the government might withdraw it at any point of time. It is not that the nil rated item cannot be made taxable subsequently, but generally if a nil rate is given, then generally it is understood that it will remain outside the ambit of tax for a considerable longer period of time, because the government feels that such an item need not be taxed at all. For example, the items of agricultural produce. Most of them, the item of agricultural produce of daily needs are nil rated. So thereby the government has very clearly given its intention that it does not intend to tax it in the foreseeable future. But if it is an exempted item, then that exemption might be removed if the government feels that the purpose with which the exemption was notified has served its utility. Then zero rated. Now, zero rated is a transaction whereby the input tax credit is allowed. So while input tax credit is not admissible in the case of an exempted item or nil rated item, but input tax credit is admissible in case of a zero rated transaction. Now, what is zero rating? Zero rating means either the goods are sold to an SEZ unit or the goods are exported. So if the goods are exported or sold to an SEZ unit, then the input tax credit is allowed. And if one is not utilizing the said input tax credit for, say, domestic supply, or if the unit is such that it does not have any domestic supply, then either the entirety of the input tax credit is accumulated credit is refunded, or if it is having the domestic supply as well as exports, then proportionate input tax credit is refunded. But in case of a zero rating, the other option available to the exporter is that he may choose to pay the IGST and claim the refund of the IGST. So this is the difference between zero rating and exempted or nil rated item. But there is a another category of item which is outside the purview of GST. For example, petro products and electricity, etc., which is outside the purview of the GST. So therein, there is no question of reversal of ITC. So if an industry is, if a business entity is selling both taxable as well as nil rated or exempted items, they can avail credit proportionately. But if an item is not taxable at all within the purview of GST, then for the purpose of determination of proportionate input tax credit, that is not included in the gross turnover. And therefore, the reversal of the input tax credit also does not arise. Now, another question which comes to the mind is that is, suppose the item is nil rated and zero rated, then whether the recipient will be entitled to pay tax on the same, whether the recipient also will be entitled to the benefit of the said exemption or the nil rating, or whether the recipient will be liable to pay tax on such an item. Any insight? Okay, so if the item is nil rated or fully exempted, then the recipient is also entitled to the benefit of the same, because you see, the recipient steps into the shoes of the supplier. It is only for the purpose of the discharge of the liability that the payment of the tax is shifted to the hand of the recipient. So if the item is exempted or zero or it does not, it is nil rated. So I'm using the word nil rated instead of zero rated, because zero rate means it is an item of exports or supply to the SEZ, whereas nil rated means as per tariff, the rate of tax is zero. Now, another question which I want to ask is that we all know that refund of accumulated credit is admissible to an entity which is under the reverse charge mechanism. Reverse charge mechanism means the rate of tax on the output is less than the rate of input tax. So obviously, if the rate of tax on the output is less than the rate of input tax, suppose the rate of input output tax is 5%, whereas that entity is purchasing its raw material or other services at the rate of say 12% or 18%, then obviously the input tax credit is going to accumulate and it can never be fully utilized for the discharge of the output tax liability. But what if the accumulation of credit is happening because the rate of tax is either nil or it is exempted? Then whether in such a scenario, obviously because the rate of output tax being nil, it is less than the rate of input tax, whether in such a scenario the benefit of refund under section 54 is admissible. Participants, I wish स्लाइड नहीं दिख रहा है. Hello, is the PPT visible to all? Visible. Is visible. Okay, thank you. So, if a person is supplying nil rated or fully exempted product, then in such a scenario, the refund of accumulated credit under section 54 is not available. So only if the rate of tax is not nil rated or the item is not exempted, only then one can avail the benefit of refund of unutilized input tax credit on account of inverted tax structure. So now let us come to the rule of interpretation of an exemption notification. You see, here I will discuss two judgments of the Honorable Supreme Court with respect to the rule of interpretation. Because the general principle of law with respect to classification, which I discussed in my earlier session, was the benefit of doubt goes to the SAC. So if there is a benefit with respect to classification, then the benefit goes to the SAC. But so the principle is that if there are, in the case of liability to pay tax, if there is any ambiguity in the taxing institute, then the benefit of doubt goes to the SAC. But in the case of exemption notification, the benefit of doubt goes to the revenue. So if there is any ambiguity with respect to the satisfaction of the condition of the exemption notification, or any doubt is there, then such doubt will be resolved in the favor of the revenue and not in favor of the SAC. So unlike the liability to pay tax or to classify the product, if suppose the product is getting classified under a rate applicable to 5% or 12%, then the benefit of doubt will go to the SSE and it will be classifiable under, say, item applicable to 5%. Or if it is supposed that the doubt is between whether the item is taxable at the rate of nil or 5%. So here also try to understand. Here when we are interpreting the tariff, the classification, so if it is between nil rating or 5%, then the benefit will go to the SSE because it is a matter of determination of the taxability in the first place. But if the item is taxable, say it is taxable at the rate of say 5% or 18% or 12%, and an exemption notification is given subsequently, then the benefit of doubt goes to the revenue. So in the matter of exemption notification, the ambiguity cannot be resolved in favor of the SSE, but it will be resolved in favor of the revenue. Now, what is the reasoning for that? The Honorable Supreme Court said that the reason why it should be interpreted in favor of the revenue is that any exemption increases the burden of tax liability on those who are liable to pay tax. So it overall increases the burden on the society. So therefore, it will result in favor of the revenue. But further, the Honorable Supreme Court said that once that ambiguity is resolved or that route is resolved, then the notification will be given a full play and a liberal construction will have to be adopted. So suppose there are conditions, substantive conditions for availing the exemption notification. So at the time of determination of those conditions, A, B, C, D, one has to satisfy all those conditions which are substantive conditions. So all A, B, C, D, suppose one is not satisfying, say either A, B or C, D, but it is satisfying 3 out of 4 or 2 out of 4, then obviously the benefit of the exemption will not be given. But once suppose the 4 conditions are satisfied, and in addition to that, there are some procedural formalities to be completed to get the benefit, and there is some infirmity or default in compliance with the procedural condition, then the liberal construction will have to be adopted and the benefit will go to the SSE. But this judgment of Honorable Supreme Court, which is in fact constitutional bench judgment that it is a judgment of 5 judges. This judgment was analyzed by a Supreme Court judgment in the case of Government of Kerala versus Mother Superior Adoration Convent. So herein the issue was whether the building, here the issue was that there was an exemption under the Kerala Building Tax Act, where if the building is primarily used for or principally used for religious, charitable or educational purposes, then it will be exempted from the tax liability. Now, in the facts of this case, the building was being used for the purpose of the residence of the nuns of a church. So the question arose whether the building being used for the residence of the nuns and hostels of educational institutions, whether it can be constituted to be used for the religious or charitable purpose or educational purpose. Because hostel of educational institution was used for the purpose of residence of the educational institution and residence for nun, and the residence for nun was obviously such a building was used for residence of the nuns. The question was whether it can be constituted to be a religious purpose or educational purpose. So herein, the Honorable Supreme Court distinguished this constitutional bench judgment in the case of Commissioner of Customs versus Dilip Kumar, whereby the strict interpretation has to be adopted in interpretation of an exemption notification. And it was held by the Honorable Supreme Court that a distinction should be made between a exemption notification, which is a general notification, and an exemption notification, which has a beneficial purpose. So it was held that an exemption should be liberally constituted. Exemption notification should be liberally construed, where such liberal construction results in overall achievement of the objective. And where the exemption notification is for the purpose of granting incentive for promoting economic growth or otherwise, and there is some beneficial reason behind it, then it should be liberally interpreted. So on those principles, it was held that whenever such a dispute arises, then the beneficial purpose has to be kept in mind, and the notification has to be interpreted on the basis of those principles. And it was said that a reading of the provision would show that the object for exempted buildings, which are used principally for religious, charitable, or educational purpose, would be for core religious, charitable, and educational activity, as well as purposes directly connected with religious activity. So, if something is directly connected to that religious purpose, so obviously the residence of nun is an important activity, because the church cannot function without nuns having the proper residence for them. So this was construed to be directly connected to the religious activity, and therefore the interpretation was given that the benefit of the residence being used for the residence of the nuns would also qualify for the purpose of benefit under the Kerala Building Tax Act. Now, one of the very important issue which arises with respect to exemption notification is that what if somebody was availing the benefit of exemption notification, or suppose the benefit of exemption notification is given for the purpose of setting up of an industry, and if subsequently that is withdrawn, then whether the doctrine of promissory estoppel is applies in such a case. Now, for the uninitiated, let me tell you what is the doctrine of promissory estoppel. Doctrine of promissory estoppel means that if some promise is given by the government, then they cannot go back from their promise, because the promise of a government on the basis of which any citizen acts cannot be retracted. So the doctrine of promissory estoppel says that the government cannot go back on its own words or promise, and it has to mandatorily comply with all the promises that it gives to a citizen. This is the basic principle of a doctrine of promissory estoppel. Now, in this backdrop, if suppose the exemption notification is withdrawn, then whether one can argue that on the basis of doctrine of promissory estoppel, the exemption notification, such withdrawal can be challenged. Now, here there is a judgment, old judgment in the context of central excise, whereby it was said that whether to grant a exemption or to withdraw it is a matter of public policy, and courts are not supposed to enter into the domain of the policy making of a government. But at the same time, if such withdrawal is arbitrary or unreasonable and not in the public interest, because while the granting of the exemption is on account of the public interest or benefit of the particular purpose, so withdrawal also should be in public interest. If government fails to demonstrate that the withdrawal is for the public benefit at large and it is arbitrary and unreasonable, then in that scenario, such a withdrawal is open to challenge. Now, in a very recent judgment of the Honorable Supreme Court in Hero Motorco versus Union of India, whereby the exemption was withdrawn, which was granted to industrial unit for 10 years. But before that, those 10 years could be completed, the erstwhile indirect regime was repealed and GST came into force. So the question was that whether on the doctrine of promissory estoppel, the government can be forced to give the benefit of the exemption which was granted to the industrial unit for 10 years. So it was said that such a withdrawal cannot be challenged because, again, the principle was that no challenge lies against the function of the legislative function of a state. But at the same time, it was said that where somebody has established the industrial unit on the basis of such a promise, the state should consider to reimburse such industrial unit out of their share of revenue. So while you see the Honorable Supreme Court very, with keeping in mind the interest of both the sides, while it said that it is not necessary that the benefit granted in the erstwhile indirect tax regime has to be continued in the current era, but at the same time, it urged the government to grant the benefit which would have been otherwise available in form of a cash benefit out of their share of revenue. You see, the exemption notification can be subject to several conditions. Now, one such condition, which in some of the exemption notification we see in the GST era also, is that in some cases, the benefit of exemption is given only if you don't avail the input tax credit. Now, what happened if somebody inadvertently takes the benefit of the input tax credit, but on realizing it mistake, it reverses an input tax credit? Or suppose there can be other condition also, where somebody fails to comply with it, but it is in a position to reverse the benefit which has arose because of the violation of such condition, then whether in such a scenario the benefit of exemption will be given. So here there are two judgments of the Honorable Supreme Court which says that if the exemption was conditional and if somebody reverses the input tax credit, then it will tantamount to not even taking of the input tax credit, and the benefit of exemption notification cannot be denied in such a scenario. Now I come to the discussion of another important issue, which is, suppose that one is entitled to benefit of simultaneously two exemption notification. So the one of the question is whether one can avail both the exemption notification, or also if two are available, then one can opt to choose which one will opt. because it is quite possible that one may not be in a position to avail both of them, but one may be in a position to avail either one of them, or also one may be in a position to simultaneously avail the benefit of both of them. So the Honorable High Courts and tribunals in the erstwhile era has interpreted that if two notifications are available, then he can choose which one is more beneficial to him and opt for that one. And if one is eligible to two notifications and there is no bar to avail the benefit of both of them, they are not subject or conditional to one availing the other one, then one can avail both of them simultaneously also. Now, with respect to zero rating, I have already discussed the fundamental concept that one can either not avail the input tax credit and export under the bond or LUT and claim the benefit of unutilized input tax credit, or one can export on payment of IGST and then claim the refund of the same. Now here, one very interesting question arose before the Honorable Madras High Court, whereby the SCZ unit applied for refund. There is one other judgment of Gujarat High Court also, which I have not cited here, but it is there. So here the benefit of refund is claimed by the exporter from SCZ unit. Ideally, anybody who is supplying to SCZ unit can choose to not pay the tax. But if tax is paid, then whether the SCZ unit also is entitled to the benefit of refund. So here the Honorable Madras High Court held that yes, the SCZ unit is also entitled to claim the benefit of refund. Now here in this particular case, the issue was that there was some procedural irregularities while making or lodging claim of the refund, because you see, we know that in the case of IGST, the filing of shipping bill itself is an application for refund. There is no need to file a separate application for refund in case of the export is made on payment of IGST. While in case of refund for refund of unutilized input tax credit on exports, a procedure for refund claim is prescribed in Rule 89, Sub-Rule 4. But in case of refund of IGST paid on the export goods, Rule 96 says that filing of shipping bill tantamounts to claim for refund. Now, it is quite possible that the details of the shipping bill or the relevant invoices are not properly filled up while filing your GSTR 3B return. So if that is not done, the question is whether the benefit of refund can be denied. So here in one of the judgment, the Honorable Supreme Court said that the procedural requirements cannot come in the way of denial of a substantive credit. So once somebody has satisfied all other conditions, then just because somebody has committed an error in filling up the GSTR 3B return, the benefit or substantive benefit cannot be denied, because procedure is nothing but a handmaid of justice and not the mistress of law. So on those principles, even though there was some error in filling up of the form of monthly return in form GSTR 3B, the benefit of refund was allowed. Now in another judgment, and this is judgment of the Honorable Madras High Court. Now another issue which was decided by the Honorable Supreme Court last year was the issue whether the benefit of input, service, and capital goods can be allowed in case of unutilized input tax credit, in case of an inverted tax structure. Now, here the Honorable Supreme Court upheld the constitutional validity of Rule 89(5). The issue which had arose from the judgment of Gujarat High Court and Madras High Court. Gujarat High Court decided favorably, said that the refund of input services should be allowed. Madras High Court did not struck down the Rule 89(5). So there were contradictory judgment of the Gujarat High Court and Madras High Court, and both the matters traveled on appeal by the department as well as by the concerned SSC to the Supreme Court. There were several intervention applications also. There were several matters before Calcutta High Court where I was appearing, so we also filed the intervention application. And in fact, one of the issues which was not pending before the Gujarat High Court or the Madras High Court, the issue was whether the refund on capital goods should be allowed. Because our argument was that in the GST law, unlike the erstwhile law, whereby there were separate basket of input tax credit for input service, input and capital goods. In the GST law, the electronic credit ledger is common for all types of credit. So the definition of input tax credit does not distinguish between the input service, input and capital goods. All it does is to distinguish and create a separate ledger for CGST, SGST and ITST, but it does not distinguish or have a separate ledger for input services and capital goods. But in the erstwhile era, such separate baskets were there. So it was argued that Section 54 allows refund of unutilized input tax credit, and since there is no difference, there is no distinction between capital goods, inputs and input services in the definition of input tax credit, so all of it should be allowed. And the Rule 89 sub Rule 5, which does not allow the refund of input services and capital goods, is ultra vires to the Act. But Honorable Supreme Court said that no, Rule 89(5) is in consonance with Section 54, and it was held that Section 54 subsection 3, which uses the word inputs, because the condition for claiming the refund was that the rate of tax on inputs should be greater than rate of tax on output. Sorry, yes. But the main part of Section 54 said that the refund of unutilized input tax credit is allowed. So the issue was whether subsection 3 of Section 54, whether it is only a condition or whether it is also a limiting effect on the benefit of input tax credit. The Honorable Supreme Court said that we cannot broaden the expression input to cover both goods and services, and therefore it denied the benefit on both capital good as well as input services. Yes. So the next issue which I wish to discuss is about, you see, there are a number of, you see, the disputes of denial of input tax credit as well as refund is arising. Because suppose the vehicle is not found to be registered on the e-Vahan portal. So they say since the vehicle is not registered or not to be found on the portal, so this entire transaction is fake and the benefit of input tax credit cannot be allowed. Also, the refund cannot be allowed. So herein, the Delhi High Court has given a judgment which says that the refund is allowable when there is no tangible reason to doubt the transaction. The transaction cannot be doubted solely on the ground that the vehicle mentioned in the invoice is not registered on the e-Vahan portal. And further, Honorable Delhi High Court said that Section 16(2) Clause B does not, or in fact, Section 16 does not have any such condition. And in fact, Section 16(2)B says that a person would be deemed to have received the goods as if the condition stated therein are satisfied. So on those grounds, those refund denial was rejected, and the Honorable High Court directed the authorities to grant the refund. Now, another doubt which arises is that suppose the rate of tax which is mentioned in the tariff is the same with respect to both input and output, but a particular nature of supply is exempted. For example, in this particular case, what happened was that the item was taxable at a full rate. So they were all items of, say, supply of computer. So the petitioner was engaged in the assembling and supply of computer parts. But at the same time, it was also supplying to DRDO. Now, on supply to DRDO, the rate of tax was concessional. So the issue which arose was whether on account of the availing of this concessional rate of tax, which is not the tariff rate, but a concessional rate of tax. So the same supplier was selling that same item to DRDO at the rate of say 5%, and generally in the general market it was supplying at the rate of say 18%. So the question arose whether the refund can be given when both the item of input, number one, input and output is the same, and secondly, whether the concessional availment of a rate is also entitled to refund on account of unutilized input tax credit on inverted tax structure. So there was a circular issued by the board in 2020 whereby it said that, look, if the rate of tax on output tax supply and the input supply is the same, then due to concessional rate of by virtue of a notification, the refund cannot be granted. But it was subsequently modified by a 2022 circular. So the issue was whether such clarification is retrospective in nature or prospective. So the Honorable High Court said that no, it is only a clarification, and clarification always apply retrospectively. So that being the case, the Honorable Supreme Court said that such a refund of unutilized input tax credit which arises on account of inverted tax structure due to concessional notification is also eligible for refund of input tax credit. Now, another issue which is also a very frequent and commonplace is that many a times, because of the lack of proper understanding whether a transaction is a intra-state transaction or whether it is a interstate supply, the payment under a wrong head is made. So if such is, if that is done, whether the refund of tax paid under the wrong head will be admissible. Herein, there was a case where the wrong payment of tax was made under IGST, sorry, under CGST and SGST instead of IGST. So once the error was noticed, then the concerned SAC paid the tax in the current head, and simultaneously after making such a payment, filed for refund of tax paid under the wrong head, and the department denied it. So herein the Honorable High Court allowed this refund along with interest, which was erroneously deposited under the head of CGST and SGST instead of IGST. Another issue, I think, which all across the country people are facing is denial of refund due to tagging as risky exporter. Now, you see, whenever any risky exporter tagging is done, then such tagging is done on the EDI portal or the customs portal. And while it is done, there is no notice issued to the SAC. One fine day when the refund is denied or not even denied, it is kept in abeyance. The refund claim is not processed. While it is not rejected also, it is not processed also. It is kept pending. And in some cases, it is denied also on the ground of tagging as a risky exporter. Now, this particular issue, I had the benefit of arguing before Calcutta High Court two such matters where the risky exporter tagging was done. And the government was doing nothing to remove such tag despite repeated communication to the department asking for why I've been tagged as a risky exporter. In one case, they were told that the part of their input tax credit is ineligible. And once such communication was made, then the SAC paid that disputed tax amount also in order to get that risky exporter tag removed. And one of the other case, the refund was being denied on the basis of L2 exporter. And this is all done by DGRAM, who never issues any notice and never takes any action regarding the removal. So here I have dealt with many such cases, in fact, for Calcutta High Court as well as other High Court. And whenever you see we file a writ and they are asked to give the reason, sometimes they are unable to furnish any reason. Sometimes they say that their input tax credit is doubtful. So what we generally argue is that whatever is doubtful, one is entitled to, the department is entitled to recover that tax from the SAC by issuing a so-called notice. But there is no condition under the Rule 89 for is video and audio not working? I am not audible or visible. Hello?
Yes, sir, you are audible.
So that risky exporter tag, as I was saying, that many a time that the department does nothing about it, and they just keep obstructing the refund. So the argument is that if any legitimate tax is due to the government, they are entitled to claim it by virtue of so cause notice. But there is no condition under Rule 89(5) that they can withhold the refund. And the department is not entitled to go beyond what is prescribed in the law. If any tax is subsequently found to be due, or if the refund itself is found to be wrongfully given, then they are very much entitled to recover it with interest. But they cannot withhold the refund. In fact, one circular is also issued, Circular 131/1 by 2020, whereby the detailed procedure for removal of tax is also given. But most of the time, despite a very clear-cut procedure being given and in a time-bound manner, the department is supposed to act, but they keep slipping over it. So in all such cases, whenever we have approached the High Court has directed the department to remove the such risky exporter tag and grant the benefit of refund. Now, one of the issue which also SSCs are facing is that in case of a search, seizure, or an SSC being summoned, the practice which the department has adopted it in most of the cases, they either call for the summon, or whenever they come for search or seizure, they force the SSC to make payment of the tax. They don't take recourse to the procedure of law which is prescribed under section 73 or 74. They refuse to issue a so cause notice, but they threaten the SSC in various manner. If it exceeds 5 crore rupees, then they threaten with arrest also, or otherwise they forcibly ask him to either make the reversal of the input tax credit or make payment of the tax through DRC 03. And if it is done through DRC 03, then they ask him to select the option of the voluntary payment. And if an issue is raised subsequently before the court, then one second, I need to take a very urgent So you see, we all very well know. I'm sorry, I had to receive a very urgent call because of the matter is there in the court. My junior is there. So here the case was, here what is happening across the country is that the department is forcibly recovering the tax amount during the search, seizure or summon proceeding, and then they are subsequently refusing to issue the so-called notice also. Then what option is available to the SSC in such a case? So here in two very interesting cases before Delhi High Court and the Bombay High Court, when the amount was forcibly recovered from the SSC in the course of seizure or summon with the threat of arrest, then the Delhi High Court directed, in fact, to refund the said amount with the interest of 6%. And in the Bombay High Court case also, the refund was allowed at the rate of, the refund was allowed, but no interest was granted. But nevertheless, it directed the department to grant the refund. And in fact, there are judgments in the erstwhile era also, wherein unless the assessment is done and amount is deposited by the petitioner, then the department cannot say that it is a voluntary deposit and therefore we will not refund it. So it has been a very well established principle of law that if the refund is made, if the amount is deposited in the course of search, seizure operation or summoning procedure, then the amount has to be refunded and the department is entitled to take the action in accordance with the law by issue of a so-called notice. Now, I think all of you must be aware of the Mohit Mineral judgment, whereby the Honorable Supreme Court struck down the notification which imposed GST on ocean freight on a presumptive basis. So after such notification was struck down with respect to liability of tax on the presumption, the question is whether the refund of the tax paid by any SSC who was not party to such a proceeding can be claimed. So here the Honorable Gujarat High Court as well as the Honorable Rajasthan High Court had directed the department to refund of the IGST paid on ocean freight because the notification for levy of such IGST has been struck down by the Honorable Supreme Court. Now, the another interesting issue is with respect to, before I talk about the refund issue, I think it is very interesting to note that the Honorable Supreme Court has held that if any amount is due and payable to the whether state government, central government, or any local authority, but if it is not part of the resolution plan, many of you may not be aware of what is a resolution plan. Then let me tell you that once the Insolvency Act was introduced, then the process is that whosoever is entitled to money from the party who has gone into the liquidation proceeding or the resolution proceeding, because in terms of the Insolvency Proceeding Act, in a time-bound manner, a resolution professional is appointed. Now that resolution profession is supposed to invite application from any intending buyer who wants to take over that company which is undergoing the crisis. And from those prospective buyers, a plan is prepared which is called a resolution plan for the revival of the company. And for the purpose of this revival, a cut in payment of the dues is suggested. So suppose the liability to bank is 100 rupees, then the resolution plan may suggest that we will pay, say, only 50 rupees, 60 rupees, or 70 rupees. Now, there may be operational creditors also who have supplied the goods and services, and there may be tax dues also. Now, tax dues are treated at par with the operational creditors. Now, as part of this plan, suppose the tax due to be paid is determined at 20% off. So what happens to that 80%? So the Honorable Supreme Court has said that whatever is not part of the resolution plan, it will stand extinguished and it cannot be recovered. And no proceeding in respect of such due can be continued. Now, in the backdrop of this Honorable Supreme Court judgment, an issue arose before the Honorable Odisha High Court, whereby when the so-cause notice was issued and the tax was recovered in pursuance of the so-cause notice, but subsequently that company went before the NCLT in a resolution process, and only 20.5% of the claim was admitted with respect to the tax amount, service tax amount. So Honorable Odisha High Court directed to refund the excess service tax collected, which is in excess of the admitted claim before in terms of the resolution plan. In another very interesting dispute which arose for the High Court was whether the physical application is to be counted as the last date of filing, because you see the last date of claim is 2 years under section 54. Now, whether this 2 years to be counted from the date of application on the portal or the physical submission of the application form. Here in the department relied on a circular which stated that the date of physical submission has to be counted as the date of filing of the claim. But the Honorable High Court said that no, the date on which one is making application on the common portal is the date when the refund should be deemed to have been applied, and that should be the date which will be counted as the date of the refund. And the last issue which I wish to discuss today is with respect to the grant of interest. Since the inception of the GST Act, you will notice that in many cases the refund is not allowed as per the prescribed timelines. As per section 54, 90% of the provisional refund has to be given within 7 days. And balance refund also has to be given on the time in a very time-bound manner. But unfortunately, I have not come across any case where the provisional refund of 90% is given, and in fact, otherwise also the timeline which is prescribed in the law is not adhered to. But unfortunately, the refund which is prescribed under section 56, which is 6%, is also not granted. So in one of the matter which I appeared before the Honorable Gujarat High Court, the refund at the rate of 9% was allowed, because as per section 56, the period for calculation of interest starts from 60th day, after 60th day. But the provisional refund has to be given within 7 days. So I argued that since no rate of interest is prescribed between the period for 7 day and 60th day, And the refund which should have been automatically, the interest which should have been automatically given by the department, that also has not been done. So in form of a compensation and interest for that period on not grant of automatic interest, the rate of interest should be higher than 6%. So Honorable Gujarat High Court allowed the interest at the rate of 9%. But the matter went up to the Supreme Court, where the Union of India filed a appeal against the said High Court judgment. And I argued that the same points which I had argued before the Honorable High Court, but unfortunately the Honorable Supreme Court said that we cannot grant interest in excess of the statutory provision, because according to the Supreme Court, there was no inordinate delay. And if the law is silent, only then compensation can be awarded, but not otherwise. But in my case, the Honorable Supreme Court neither recorded my submission nor made any observation about the fact that no rate of interest is prescribed for the period from the mandatory period of grant of 90% of the provisional refund, which has to be granted within 7 days of the application and 60th day. So friends, with this, I conclude my today's talk. I will share the PPT and I would like to take some of the questions and then conclude. Today I have to rush to the court, so that is why I'm a little bit in a hurry. I think nobody has any question with respect to today's session. So, Madam, shall we conclude?
Yes, sir.
Excuse me, madam.
Yes, sir. If there is no questions left, we can wind up the session.
So let us announce that we shall be doing the next session on 25th, because on 18th I am not available. So let us do the next session on 25th.
Yeah, it's perfect.
Okay. Thank you very much, everybody.
Thank you so much, sir. Thank you, everyone.
Thank you.